Tesla closing the day up about 4%, and so far everything is playing out as we've expected. You can see that we're still holding inside of this market bias level that we were talking about yesterday. Yesterday, it was not looking as good as we were today because that BX trender, which you can see here, actually closed with a lower low, which signifies a rejection. But we talked about in that video how if you were to take a Fibonacci retracement from swing high to swing low of that run, that we would see the golden zone or the level that Tesla should bounce off of was sitting right around 220 to $222. Price ended up pushing up overnight, opening around $227, and then we closed the session around $232.32. Something very important to notice here is that the BX trender now has actually turned into a higher low. You can see that the last times that we actually had bounces on Tesla with the daily chart, what was the BX trender doing? It was making lower lows the entire time. Now, I'm not saying that this is the bottom for Tesla. I still think that there is a chance that we could see a low of $200. Worst case scenario, I still have my December calls. I'm in with about 50% of the total positioning that I wanted. But at this moment, the overall trend is still bullish. You can see we're holding the market bias. You can see that the BX trender is making higher lows, which is a very good sign. It's showing that money and strength is actually coming in behind this move. But on the shorter time frame, we're still making lower highs. And until we break these lower highs, I'm not entirely sure that we're going to see the breakout to 270 and $300. I believe that breakout is coming no matter what. At this point, it's just more about the timing of it. And for me personally, I don't have to time this to perfection. You guys can see I've been holding December calls for a bit now, expecting it to actually drop. But I see a lot of you in the comments section asking me on shorter time frames what I think is going to happen. Now, this still stands with what we said yesterday. If we take our Fibonacci retracement from the most recent swing high on the daily to the most recent swing low on the daily, you're going to notice that the golden zone is about $240 to $245. So I believe that if there is a level that we will reject at, it will be at $240 to $245. We could still have one more rejection and have price come back down to 215, 205 worst case scenario before the bull flag breakout occurs. Or there is always the chance that this is the actual bottom short term and that price is just going to break out over the next couple of weeks. I don't entirely buy into that right this second. I would love for that to happen. What I'll have to see is the BX trender over the next week, week and a half, each and every single day, making a higher low and then eventually into a higher high, which is what we saw back here. And you can see that it actually got stuck making higher highs for almost a week straight. That is a clear sign of a breakout. The other thing that I want to see is the weekly chart start to make higher highs on the BX trender as well. So I still think short-term target, $240, potential rejection there, but we'll see what ends up happening. If you guys want to trade with me each and every single day, you can go ahead and check out the link in the description to join our private academy. And if you just want to learn the two-step trading system or get access to all of the courses that we have completely for free, the link to all of our free courses will be down there. I recommend taking the market bias course, which is going to show you the exact strategy and the exact settings that I use with this market bias indicator here on the channel each and every single day. See you guys tomorrow.